And it looks like we are live. Welcome, everyone, to another episode of the Coach's Playbook. Uh, it's Tuesday, February 9th. This will drop on Wednesday, February 10th. It is pretty chilly here in the Midwest, but the markets are hot.
Ooh, look at you with the.
Like that one? I totally made that up.
Good.
I just made it up. Here today with Dan, Mick, and Hogue, the usual cast. I'm JD, filling in for Jack again, who is down in sunny Florida and took
Got
the
an
day
important
to be on the
business
links with
meeting
his
with his
dad.
Envious.
Right? Aren't we all? I was up at 3 a.m. shoveling, and one of those days. Anyway, sticking with our first quarter theme of trader development, we're going to be talking a little bit about technical analysis today. If you've kept up with our blog or the podcast, you know we've been on this for a couple weeks now. It's a great topic. Everyone has their opinions, so we're just going to go around the horn. But first, Mick, do we have a funded trader shout out?
We do. I kind of neglected to check this out right ahead of time, but yeah, big shout out to Anastasia. She's up $2,300 right now trading the NASDAQ.
We're on that NASDAQ run again.
It's nice. I can, we've got so many traders and so many people doing well. It's easy when I'm not prepared for that. I can just shoot over and look at my screen, and there's a lot of options to choose from.
Excellent.
Not a bad thing.
Great job. I love how the NASDAQ trends all the time. We'll get 2 or 3 weeks in a row. NASDAQ traders just killing it.
Yeah, it's our most popular product right now by far in the live accounts. A huge percentage of our overall daily volume is in the NASDAQ, and I understand why.
Yeah.
Scares me.
Oh, the speed? Yeah.
Yeah, it's just too whippy.
I'm with you there.
Hogue's getting old over there. He's driving in the slow lane. He wants to take it slow and easy.
I had my right turn signal permanently put on.
So you're the guy that I'm driving behind. Like, are you going to get over or what? Come on.
Yeah, that's me. You young whippersnapper.
All right. So everyone's got their own take on this. Personally, I like to look at a mix of technicals, fundamentals, and I throw seasonalities in there too. This isn't a plug for the Stock Traders Almanac, but I do read it every morning. I think it's they have an interesting take on events for that time of year. You know, just speaking right now, I was checking it out just a little while ago. I was going to bring it up on the podcast, but the January barometer, which is basically how the month of January fires, is, you know, an indicator of how the rest of the year is going to go. So the January barometer missed. The S&P was down about 1.1%. So it's looking like a negative return for the S&P for the rest of the year. That kind of happened last year too, and we all saw it come back and end up closing significantly higher once again. But there's also a couple other things that they track. Post-election year, February's. They say when February's good, it's just okay after an election, but when it's bad, it's really bad. So that's just another thing to keep an eye on. But Dan, what are you looking at when you're? What kind of patterns are you looking for when you throw a trade on?
Nope, Hogue left us, and he's back.
Sorry.
So for me, one of the biggest things, you guys have probably all heard me talk about it. I have to look at levels. I'll use some sort of patterns that I see in charting. But really what I'm looking at is I'm watching volume and I'm watching time at specific levels and where that market's trading, utilizing a couple different indicators, nothing too crazy. 20 and 50-day moving average, some of my favorites. VWAP, you guys have heard me talk about that. My biggest thing that I'm trying to define when I look at the market, so I'm trying to define that channel. I don't like to say range because the range, it says, okay, it's ranging sideways, but I'm trying to define a channel, whether it's moving higher, lower, or sideways. I want to define my channel. Once I can define my channel, I'm going to utilize some of those levels to look for opportunity. And there's multiple channels. It's not just one straight simple channel. There's a lot going on inside of that. And I typically start with the weekly and I move down to a daily 4-hour, 30-minute chart. I'm holding the daily 4 and 30-minute charts up on my screen for any market that I'm actively trading. I am looking at the 30 mostly for execution. I'm looking for it daily just to remind me of that higher time frame and what's going on. And I'm utilizing that 4-hour for acceptance. So if I'm starting to trade outside of that range, I'm looking at my 4-hour to see if it's accepting outside of that. If I don't see true acceptance, I'm looking to stay back within that range, and I'm going to probably start to fade that extreme. If I start to see acceptance outside of that range, that to me is going to tell me, okay, things are maybe changing here a little bit, time to adjust as opposed to fading extremes. Maybe we're going to get the breakout. Maybe we're going to shift our trend. Maybe things are starting to change, and that's when I'm going to be looking for those. So those are a couple things that I'm really looking at. Lately, moving averages for me have been just so interesting. I've been watching the FX market a lot lately as well. So shameless plug, if you haven't checked out 4X Press on our YouTube page, it's our new weekly show. We're doing every single Monday. I've done the last couple of them, and it's a lot of fun. And those 20 and 50-day moving averages have been phenomenal when I'm looking for targets in those markets. So those moving averages, I'm not looking to execute. I'm looking for more just maybe a target down below, or it's helping me kind of understand where that market's looking to go.
Yeah, I couldn't agree with that more. I've been talking about moving averages since I came to Top Step. They've always been a thing that I track. Day like today, the S&P has been just grinding higher the last 6 days. Those ranges are contracting, volume is dropping. I'm going to be looking to target that 20-day moving average very soon, but I'm not looking to pick tops either. Hoag, what do you think?
Well, I've always been more of a reversion or contrarian trader. So as far as technical patterns and stuff like that, I'm always looking for the reversal patterns, the head and shoulders, the island tops, island bottoms, and there's always a confluence with anything I'm looking at technically or in candlesticks. Everything is, there's got to be some confluence with what's going on in the market profile. So, the moving averages, I tend to look at a shorter time frame moving average for, again, being more of a contrarian trader. I'm always looking for the end of momentum in one direction or another. I have two whole moving averages that I kind of use in conjunction with each other to see on the day time frame when a move may be kind of running out of its momentum again. There's a million ways to skin a cat. It's all in how you look at it, right, gentlemen?
Exactly.
100%. And like you said, just touching on something you said, the technical patterns, there are people out there that don't believe in these technical patterns at all, but that doesn't mean you shouldn't know what they are. If you're going to fade a pattern, you have to know how to identify a pattern. So even if you don't like them, you should still be aware of them. Mick, what's happening in your technical analysis world?
Well, I love the technical analysis. You basically have, I would say, your two main types of analysis: technical and then fundamental. The fundamentals are always going to play out in the technicals because technical is basically just plotting data points where prices have traded and volume. I'm mainly focused on technical analysis. I think it's very important to have an idea of what happens fundamentally in the markets. Fundamentals do take time to play out in the market. So, you get if you've ever wondered, and I know I've mentioned this or we've discussed this. I mean, if you ever wonder why on Wednesday when the crude oil release comes out and you have a bullish number, the market falls, or you have a bearish number and the market rises. There's a lot of other factors other than just, an EIA inventory number coming out. I like technical analysis. I like it from the top down approach. I want to know, the overall market structure. I glance at a weekly chart, get a good idea of, hey, overall in the very big picture, what direction are we going? Up, down, sideways? And then you break it down to, the definition of top down, start at the top. Weeklies, then you go to dailies and then you break it down lower time frames. that's what I want to be knowing. I want to know overall, where are we going? I can always change, but it gives me a good perspective of, hey, if I want to follow this trend, you know, I'll look at the charts to find a pullback to get involved, you know, in the direction of the trend. Or, you know, we talked about moving averages. I like moving averages. It's, you know, something you talk about, these big moving averages, the 50-day, the 100-day. A lot of people, a lot of participants in the world are watching those. So it's always good to be watching the same thing that your competitors or your other participants are watching. John mentioned, you know, momentum, changes in momentum. I like looking at the oscillators to see, hey, if, you know, we have been trending higher, but now I'm starting to see a loss of momentum on the higher time frame, you know, is there an opportunity there for me to take that? So I like the moving averages. I like the oscillators. You know, John mentioned island gaps for a little bit there. You know, gaps can at some point in time tend to get filled. So I like being aware of where those are. But to me, it's all about, you know, knowing the higher time frame, trying to catch a piece of the trend. I'm a firm believer in the most money can be made catching a ride in the direction of the market. However, there's all sorts of opportunities that the market presents themselves with,
Mick, you said
presents us
something.
with, I should say.
Yeah, you said something, Mick, that I think everyone needs to hear. Markets, when it comes to the two analysis, fundamental and technical, we can have an idea of what's going to happen fundamentally within these markets, but the only way to properly execute them is having some working knowledge of technical analysis. Just because that bullish number comes out and we expect the market to go higher, well, we may just want to buy and we say, well, I'm going to buy because fundamentally this market's going to go higher. But more often than not, if you go off that principle, you're going to get stopped out. You're got to wait for technical analysis to kind of show you where to enter in on that bullish number, not just jumping in and going, all right, it's going to go higher. So let's do this.
Yeah, I've got kind of a good story I just want to share about fundamentals. Back early when I started trading, so this must have been 2009. I was, you know, mainly focused on the grains, and you know, I'd lost a lot of money selling soybeans over the course of a couple months. I was just kind of, you know, I had a very short bias to the market. The growing season was extremely favorable for the row crops, corn, soybeans, even wheat was rallying, I believe. And I was just like, we have such a huge supply of these soybeans out there. You know, we're going to have record crops and whatnot. The one fundamental thing I didn't really think about was the rest of the world's appetite to acquire these soybeans that we were, you know, having such a huge supply of. So China was a huge buyer in soybeans that spring, summer, and you know, it was one side of the fundamental analysis that I didn't think about. Had I not worried too much about the fundamental analysis and I looked at the charts, the technicals, I would have, you know, which I was looking at, but I had a strong bias, and this is me as a new trader, not as nimble as, you know, I am, you know, years later. And I would have just, had I only looked at the charts, I would have said, geez, this market's going up. You know, I got to find buying opportunities, not selling opportunities as we're making new highs. So that was a nice learning experience for me. Cost me a good amount of money early on in my career, but definitely, you know, saved me a lot of money later on in the career.
Yeah, that's for sure. You got to have a solid balance between technical and fundamental. Something that Dan mentioned, trading around numbers. Yeah, you might have a technical signal telling you to get short right here. But if it's 2 minutes before unemployment and you're not looking at the economic calendar, you're likely to get burned. So it works a couple different ways. Anybody else got anything they want to throw in here?
No, this is a fun topic. And, you know, whatever we are mentioning, you know, find what works for you. Notice how there's four of us and we're all kind of talking about four different things.
And it's such a broad subject. It's like we almost don't know where to start.
Yeah, I want to just touch on patterns because I know patterns are a lot of things that, I look for patterns. Other traders look for patterns. As a newer trader, you're looking for anything you can to base a decision on, price outcome. So you might be looking at bull flags, bear flags, that kind of thing. These patterns, what they really are is interpretations of past price actions. So you could see that, oh, when a market makes this kind of formation, there is a chance. There's no guarantee that a bull flag is going to, go higher, but you see certain patterns over time, and there might be a certain outcome that comes from seeing that pattern. So that's what all these patterns are. Hey, we've seen something like this before. It might play out like this. It certainly might not play out like this. But just one thing I wanted to kind of mention, since we hadn't really talked in detail about patterns.
Yeah, history doesn't always repeat itself, but sometimes it does. And if you can recognize it, you can capitalize on it.
Sometimes.
Your likelihood of success increases exponentially the more you can recognize patterns, or the better you're able to recognize patterns.
Yeah, and understand how to trade them correctly. There's always a kind of a point of confirmation when a pattern is going to actually present itself as a good opportunity, and knowing enough about the pattern and knowing when the confirmation or where the confirmation level is also important. Like a bull flag, I'm always looking at the bottom of the channel for opportunities. And then when it breaks out the top of the channel on a bull flag, that's another opportunity to either leverage or just to get in altogether. So there's different areas where you're going to find your good trade location, and then where confirmation is.
100%. Excellent points. Well, we could go on like this all day. Any questions rolling in? Anybody interested?
Quiet in the chat. We got Magnum coming in just saying good afternoon. I posed the question what they're looking at, and he's trading ESNQ pretty much every day. Like hearing all the perspectives. So thanks for that, Magnum.
Awesome.
But I do have a quote today, and I'm not taking credit for it. Mick sent it over, but I will read it off. I thought it goes well with the month of February, and this comes from Rosa Parks. You must never be fearful about what you're doing when it is right. And I think that's about spot on. So going back to confirmation in your technical analysis, don't be fearful, because it's the right thing, right trade to take.
Couldn't agree more.
Thanks for sharing that one.
Thank you very much.
Thanks for sending that one over, Mick.
All right, Hogue, you want to take us home?
Sure thing. All these opportunities, all these technical patterns, all the candlestick patterns, all the market profile information, there's no guarantee of success. Trading is difficult, but this difficulty can be taken two ways. You can take these difficulties as ways to point out your weaknesses. You can also take these difficulties as opportunities to find your strengths. I prefer to think of it as the latter. Get out there, profit,